Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders, and our website is www.stochastic-market.com, www.dayprotraders.com. The title of this video is how to swing trade on 2 days chart using the RSI indicator part 4. Okay, this is a continuation of part 1 to 3, so we recommend to traders to watch part 1 to 3, all right, to understand what we are doing here. All right, when a relative strength index indicator is overbought, it is pointing to us a resistance level. All right, I've talked about it already in a video that we call how to avoid the RSI mistakes. All right, so I don't want to repeat myself in these short videos. When the RSI indicator is oversold, it's pointing to us a support level. But very often, swing traders get into trouble when they are using the relative strength index indicator because they will just go and sell because the RSI indicator is overbought. But in that case, they are not trading the price, they are trading the indicator. So they sell, the RSI goes down, the price goes up, and they lose. All right? So how do we avoid those mistakes? All right? You can see that here, in the third part of this series of video, we were buying on the edge right here. All right? In this session here, we were buying right where my cursor is, but the RSI is overbought. How come? But it worked beautifully. You can see that the price, okay, was testing the edge of this pink line, and it went up. So some trader will be selling while we are buying, but we buy at overbought zone because we are not trading the RSI, we are trading the price. Traders that are trading the RSI will be selling the RSI, and the RSI was going down for them, and the price was going up. All right. So you don't want to do that. You don't want to trade the RSI. You want to trade the price. As I've said 100 times, the RSI indicator will give warnings, but the price must confirm it with a direct signal. It makes sense? All right. So though the RSI is overbought, if the price break above, here you can see that the RSI is pointing to us a resistance zone. Which one? The pink one. This is it. That's why it was pointing here also. You see, all this section here, the RSI is telling us resistance zone. All right. See, okay? If you draw lines, telling us resistance zone. Resistance zones. Okay. Here it is. Resistance. Which one? This one. All right. That's why it's stuck here. Now, but here, where we were buying using the blue channel, remember in the last video, okay, pull back, price display, a low, a higher low, a higher high, pull back to retest the edge of the channel. The RSI is overbought, but it's pointing to us the pink resistance, but the price breaks above that pink resistance and finally support. So because we do not trade the RSI, we are trading the price, we keep our eyes on the ball. We can buy, but we don't want to violate the market pattern. It's a blue rising channel, the tools for swing trader, check part 1, all right? And also we apply a top-down trading method with the trading triangle. That's why it did work out beautifully, okay? You see here, they are still overbought. Now, let's move on, all right? You hear it now, you understand it, okay? To our chart, you can buy if the RSI is overbought, but the price finds support above the resistance that the RSI is pointing to us. So check the video about how to avoid RSI indicator mistakes, all right? So we bought it here, and it went up. Though the RSI was overbought, we can continue to buy along the lower part of the rising channel, but provided that the price has displayed a new higher high. This is very important. If it doesn't display a new higher high and it retests in the lower part of the channel, we need to be careful. It may work, it may not work, but it will put us under pressure. As I explained to you, what will go through the mind of the bearish trader if they see that the price failed to display a new higher high before retesting the lower part of the channel. This strategy is for the rising channel. I want you to understand it. Higher high before a higher low can be considered as bullish. If we do not see a higher high before we see a higher low, we put a question mark on it. If we want to trade it, we need to be careful. It may work, it may not work. Sometimes it will work, sometimes it may not work. All right? Always apply the trading drill top-down trading method. Do not violate the market pattern. It's not all about technical trading. You want, if you are a swing trader, as a day trader, you can get away with it, but as a swing trader, you want to pay attention to the fundamental of Google Finance, Yahoo Finance, and Forex Factory. So here, the price has displayed higher high compared to the previous high, retesting the trend line on the Tuesday's chart. This is a bullish setup. So TSTWSY is usually trader will implement our trading strategy. Very simple. On the edge, top-down trading method, signal time frame, TSTW, key 02. Again, it displays a higher high, the market pattern remaining intact, and retesting, our bullish trend line. This is another bullish setup. Top-down trading method without violating the market pattern, steadily. Give it a chance. So if it's going up from here, trader asks me, where should I take profit? Take profit when you feel like it, That's the best thing I can tell you. Or take profit at the first and nearer resistance level. You buy at a support level, take profit at the first and nearer resistance level, or when you feel like it, But sometimes trader will say, okay, well, you may decide to allow it to go up here. Somebody may buy here, swing trader may buy here, and let it run all the way up here, as the price doing all this, depending on he or the way his tolerance, his risk tolerance, But normally, if trader buy here, they want to take profit here. But because the price is a rising channel, you can take profit here, wait for it again, here it is. Now, if sometimes the momentum will become very strong, and the price will not come back all the way here, you see here, start running. How do you handle that? Use pitchfork tool. So traders say price going up too fast. Use pitchfork tool, Use pitchfork tool. So you can see here, this time, it did not come. So we'll be waiting and say, where is it? The pitchfork tool and the Fibonacci extensions allow us to see hidden support and resistance level. We can also project the channels or use the median line of the channel to detect hot spot trading zone. Let me say this to you again. Fibonacci extensions. Use them. Fibonacci extension, pitchfork tool, market geometry will allow you to detect hot spot trading zone. So, though the price did not come all the way to the lower part of the channel, we can use pitchfork tool, You know how to use pitchfork tool? Here it is, 1, 2, 3. Go to www.dayprotraders.com, click on pitchfork tool, and watch the video. If you don't get my accent, play it 100 times and get used to it, So here, 1, 2, 3, 1, 2, 3. So that is going fast. We expect it to go all the way here. We on a 2-day chart, we see that day before it start going up. We say, what's going on? Where are we? So here, if you want to buy here, remember what I said to you. On the edge of the trend line, what do you look for? You look for support level. If you forget that, if you are buying on the edge of a trend line and you are not asking yourself, where is the support? Do not use the trend line alone. So here you see we were buying here. You draw that line here. Where is the support? Is there a better support below? Because sometimes the price will break below. You see this one here. You see the horizontal line that I draw? You break below it. Or it's testing here on the edge. No bad place. What's going on? Here, you can see that the price couldn't come here. Why? Move this green line. See, the previous high. Break above the previous high. That's what he did again. He did exactly the same thing here. Previous high, price break above it, retest it, touching the edge of the trend line. Now, he break above the previous high again here, retesting here, but we are far away from the lower part of our channel. By using, the pitchfork tool, Fibonacci extensions, market geometry, and also when the price retesting the edge of the pitchfork tool or the trend line, when we must find the horizontal support level, before we can validate our trade setup. Once we validate our trade setup on the higher time frame, we go to the signal time frame and then apply the top-down trading method. It makes sense? It is also powerful. This is how we trade, we swing trade on a 2-day chart using, the RSI indicator. But before I close this video, I have one more thing I need to tell you. I promised that I would talk to you about the red channel that we were looking at this chart, So the price is in a rising channel, Okay, I got 2 minutes left. The price in a rising channel. So our original channel, I have too many lines now. Let's remove some line. Okay. On a 2 days chart, okay. The price in a rising channel on a 2 days chart. Remember, the original channel is the blue channel, okay. Let's remove this pink line also. Okay, so we can see clearly the 2 channels, okay, only the 2 channels. Okay, are you with me now? Okay, so one is blue, the other one is green. Okay, let's remove all this so we can see everything clearly now. The RSI is overbought, but we are buying because we are not trading the RSI. Now I want to talk to you about the red channel. The validation of the setup. Sometimes the mistake that traders will make when they are using the rising channel, that is, they will stop only on the setup time frame. So we are on the 2 days chart. Let's go back to the 2 days chart. That's where we draw a line. Okay. So you're on the 2 days chart. You draw your blue channel because 1, 2, 3 point. You draw your blue channel on your 2 days chart. Sometimes traders get into trouble very fast. The price may display a higher high. Okay, and then the display retesting the trend line. The price may also be at the support level, but the setup will fail horribly. A trader will say, "What are you talking about, George? What? Are you out of your mind?" Okay. Sometimes the problem is that on a higher time frame, sometimes the market pattern is bearish. So suppose we are on a 2 days chart, we see the rising channel, but on a weekly chart, it's in a declining channel. Which one is going to win? So you are seeing this is your Tuesday channel, so rising channel, and you are somewhere here buying, okay, on the edge. When the weekly chart traders are waiting to sell you down because the market pattern on the weekly chart is bearish. The point I want to make here, without making this video too long, is that after you see a rising channel on the daily chart, on the 2 days chart, and the RSI is bullish, can be even overbought, but if you receive a buy signal, you don't want to stop on the 2 days charts. You need to go to the weekly chart or monthly chart, even a higher time frame, to see whether there is another market pattern that is conflicting or aligning with our 2 day chart channel. So on this 2 days chart, we see a rising channel. Now we don't want to stop on the 2 days chart because probably on the weekly chart we may have a bearish channel or horizontal market pattern. So we want to see the bigger picture. That's why when we go to the weekly charts, from the 2 days chart we go to the weekly chart, you can see that I can draw, so 3 points again on the weekly chart. This is the first point. All right, the second point, one, a low, a higher low, a higher high. 3 points we need, okay, to draw, okay, a channel. So 1, 2, 3, I draw my red channel on my weekly chart. I'll start playing my game on the 2 days chart somewhere here. From the daily chart, from the 2 days chart, I come to the weekly chart. I notice that, okay, the market pattern on the weekly chart is also bullish. So there is no conflict between the market pattern on the 2 days chart and also on the 2 days chart in relation to the weekly chart. So the 2 days chart channel is not conflicting with the weekly chart channel. All right, this is what we want to verify. But sometimes you may see a rising channel on the 2 days chart, but a declining channel on the weekly chart, or you may see a declining channel on the 2 days chart, but a rising channel on the weekly chart or monthly chart. You want to push it and be very curious. There are more to this, as explained to traders, okay, at www.tstws008. All right, it's about training to swing trade like a pro without violating the market pattern, okay? Again, you want to buy, this is so important, you want to buy at the support level. Know where are the key levels on the higher time frame, all right, so you can make excellent decision. All right, what's happening? Project the channels, okay, in order to make excellent decisions. In the next part of this video, which will be part 5, I'll quickly go through the, a bearish, setup, but everything else stands so far, as I've said to you already, all right? So validate your setup on a higher time frame, but do not violate the market pattern. When you see 2 market patterns on different time frame conflicting with each other, you want to be very careful. Draw the horizontal support and resistance level. Do not trade the RSI indicator itself, trade the price, because the RSI can be overbought. As you can see here, the RSI period 14 on this weekly chart is overbought. while the price is beautifully moving forward to the upside. You see here, it was in a rising channel. Trade the price and do not violate the trade market pattern. This is the end of part 4. I hope you have learned something from it. Okay, and we make excellent swing trading decision. We are the TSTW S008 traders, talking about how to swing trade on 2 days chart using the RSI indicator. Thank you for watching, and I will speak to you very soon.